What's up, crypto land? This is the Proof of Money podcast. I'm your host, Drew Griffin, the most real, honest, unbiased podcast in all of crypto. And so what we're going to do in this show is every week I put out an episode called What You Need to Know About Crypto. I take the biggest Bitcoin, blockchain, crypto news of the week. I break them down and give you my expert analysis. And this has been a great week for Bitcoin news. A lot of stuff going on in the market. So the first thing we're going to talk about is there is a big crypto battle going on with KIK versus the SEC. Now, all this stuff is coming off of the Proof of Money newsletter. Make sure you subscribe to it. Every single day I post a podcast. I release articles through email, publish it to the website right here. Make sure you subscribe. Every new sign up in June is free. I won't keep this thing free forever, but I got some big stuff coming to you. And like I said, next week, all right, we're going to keep putting out podcasts, more stuff. So make sure you subscribe to it. proofofmoney.substack.com. But the first thing we're going over is SEC KIK in a big battle over 2017 KIN token. And what the SEC has come out and said is basically it's an unregistered security, and they've gone after several blockchain companies over the past couple of years. But this is the biggest case besides some of your stuff like the DAO and all that. But it's not looking good for KIK, okay? Because there's a lot of precedent that the SEC has of winning these cases of unregistered securities, and they have a lot of evidence that KIK leadership, so the CEO and other members of the leadership team, knew going into this thing that if they went ahead with this KIN ICO, that there's a good chance that the SEC would come after them in this lawsuit that we're seeing today. So the SEC is going to spin that and use that against KIK in this legal battle, and it's going to be tough for KIK to defend. And one thing I want to put out there that with the SEC, okay, their job is not to create these type of regulations. Their job is simply to enforce it. And unfortunately, it's our lawmakers that have got to start putting in some more crypto-friendly regulation, because what we have now is just, I mean, it's absolute garbage. The Howey Test, what the SEC uses to define unregistered securities, was created in the 1930s, which was almost 100 years ago. Okay, and but almost every major piece of technology that we use today has been invented after the Howey Test, and we have so much different type of companies being created, so many different types of technology created today. To sit here and have the SEC and lawmakers say that we're going to use laws from the 1930s to define what is security, what isn't security, is a shame, and really it hurts the individual investor who's not accredited and doesn't have an opportunity to take risks like investing in certain startups and these new types of technology because of the laws we have in this country. And it hinders their ability to grow their money because of these ridiculous security laws that we have in place. So hopefully, okay, this court battle will help kind of start bringing attention the old and outdated laws that we have in this country. But until that happens, it's not going to look good for KIK, and it may be a really, kind of a slam dunk for the SEC. Now, KIK did raise millions of dollars as a fundraiser for their legal team, but security lawyers are expensive. So it's just, this is going to be an ugly knockout, drag-out battle right here between the SEC and KIK. But hopefully something good will come of it. I really think we could create a framework for having ICOs and stuff like that would allow more startups to be able to get capital without going all through these loops of ladders. I am working on a framework. It is one of the things I'm going to put in my Sunday newsletter. So like I said before, make sure you sign up to it. All right, so the next thing I want to talk about is Facebook is creating a stablecoin, and really they took one more step to diminish the privacy of every citizen in the world. Now, the stablecoin is called Libra, and it's important that people understand Libra is not a cryptocurrency. To me, a cryptocurrency is the ability to make a transaction between other people without a third party or some sort of big centralized group. And Facebook getting into the financial game, I mean, it's no different than them being just a major bank. And I really think this is not something people want to use just because all the privacy they're going to give up. Now, I know an argument against that is people say, well, every time you swipe your debit card, your bank tracks your transaction. That may be true, but your bank is not the biggest lender of your data and doesn't sell it to just anybody who wants to pay them a price. And so really, I think this is a step against people's privacy. I don't think it's needed. Um, but what can you not make a payment with online that you couldn't use a Visa? You know, I think it's a better PayPal use for the Facebook network. And some people get excited like they're going to be able to invest in it. Okay, you can't make money investing in a stable coin. You might as well just hold your money in US dollars or some other type of currency because there's less risk associated with it at this certain point in time versus holding on a stable coin. It is big for the entire blockchain community because it is bringing attention to crypto, but it's just power that I'm not sure we want to give to Facebook. And there's some things that I think people should really keep in mind about Libra. Like I said before, this is not an investment, okay? You don't make money off something that keeps its value stable, all right? So if you're thinking about investing in Libra, I don't know what to tell you. It's not an investment. It's a stable coin. The whole point of a stable coin is the price remains fixed. It doesn't increase in value, all right? It's not going to bring any money into the crypto market, okay? So it's not going to help flood money into Bitcoin. And really, it may hinder using other cryptos as a payment because so many people are using Facebook today, and if they want to use this type of stable coin as a payment, it would probably be easier than a lot of stuff that's incorporated right now. And at the end of the day, it's just another way that Facebook can extort data from its users and sell it to the highest bidder. And it's going to watch what Facebook does lately, okay? Because they are getting slammed by the DOJ and their stock price has plummeted. And so they're going to do pretty much whatever necessary to make sure they fatten that bottom line and keep their investors happy, all right? So, not a fan of this stable coin. I think it's just going to hurt your privacy in the long run. I'd rather have Bitcoin than hold on to Libra. So, I shook my head when I saw this come out. Basically, if you buy, sell, hold, or mine crypto in India, you can get up to 10 years in prison. Now, sometimes countries want to take a step back from innovation. Okay, it happens. Sometimes countries want to hinder their economy. Sometimes they want to find ways to screw over their citizens' rights and put them in prison for doing absolutely nothing. India did all three with one crappy piece of regulation. Okay, so this hasn't been passed yet. Hopefully for the citizens of India, it doesn't get passed. But basically what they want to do is come out with a bill that says if you buy, sell, hold, or mine crypto, you can serve up to 10 years in prison. And this is really devastating to the citizens of India who had a belief that one day they'd be able to use crypto. And it's sad that a country would take this step because India has made them illegal. Okay, and it's a shame that they're stripping the rights of their citizens and not giving them the ability to use cryptocurrencies because the day you were born on this earth, there were certain rights you were given, and the ability to choose a money that you want to transact with is a freedom that you have to choose and not your government. And it's just completely stupid. So they're stripping their citizens of rights, but even more importantly, which that's kind of a bad way of saying it, but if you kind of look at a bigger picture than just the individual, okay, they're going to hinder the country's regulation. Cryptos are one of the most innovative technologies of the past decade, and countries around the world are competing, all right, to create businesses that are going to be a top leader in this field. Think about the Microsoft of blockchain. Think about the Facebook of crypto. Think about all these huge companies inside the United States that help drive the economy. And then you look at some of the big ones over in China, other countries that are helping drive the economy. When you ban a technology, you're pretty much saying, okay, we're not going to innovate this whatsoever. We're not going to allow any company, okay, to try to create a product from this technology. And so you're going to hinder your economic growth, okay, by allowing your competitors to build businesses that'll help bring in revenue. And even more importantly, you're going to limit the amount of jobs that could be possibly created in your country, which is one of the biggest and most important things when it comes to economic growth. Okay, so India just basically shut it down for this entire space to create business inside their country, and it's a damn shame. It just goes to show you that they're more afraid of having something that they don't understand and they don't control than they are about allowing it to thrive inside their country and doing what's best for their economy and doing what's best for the rights of their citizens. And it's just a it's a joke, man. I feel bad for the people of India, okay? And really what you think it comes down to is just control. Just one more way they can control their people and oppress their people. And like I said, it's going to cause more harm than good. Personally, okay, I think they're picking off, they're chewing, they bit off more than they can chew because they don't even understand cryptocurrencies and they're going to try to ban it. More importantly, can you even ban Bitcoin and cryptos? Is it even possible? Okay, so enforcing this regulation, this legislation, is going to be nearly impossible for them, and it's just completely, stupid. So I'm gonna get off this, but I feel for you, citizens of India. If there's anything we can do for you, make sure you let us know. Okay, so last week in my newsletter I put out on Sunday, I talked about how we do need some light touch in crypto. Okay, regulators need to come in and just put in just a nice little easy piece of regulation. And so this kind of got reinforced yesterday, not yesterday, but a couple days ago, when the Polynex crypto exchange lost over 1,800 Bitcoins because of a flash crash. So there was a margin tradable asset. It's called clams. It allows people to lend cryptocurrencies and gain interest off that crypto. But the value lost 77%, okay, within 45 minutes, and it liquidated all these accounts, the pay monies lost by those lenders. And so the crash, they're supposed to have a code set up on their exchange to prevent this from happening and protect the lenders. But the speed at which the crash happened, okay, prevented from that happening, prevented from those circuit breakers being flipped, like you see with a lot of exchanges when you have a flash crash, like we've seen in the stock market, decades ago. But this is something that regulators really need to step up. My biggest thing I was saying about light regulation is I think it needs to be geared towards crypto exchanges. Crypto exchanges are getting away with a lot of stuff. They're not providing very good custodial services. They're not providing enough securities protection for their investors. And we saw this with the Polynex exchange. We need to make sure that we have regulation intact that's keeping up and making sure these exchanges have enough protocols, have enough procedures, have enough manpower, money into their systems to prevent investors from losing money. All right, so this has been what you need about crypto. Make sure you sign up to this newsletter. Like I said before, every single subscriber is free for the month of June. All right, every single day I put out a podcast, I put out a newsletter, something. The next weekly newsletter comes out this Sunday. I'm going to give the price analysis of Bitcoin, what is going to happen going ahead of time, looking ahead at next week, the biggest stuff going on in the market, the best podcast of the week. So make sure you subscribe. You can follow me on Twitter at Drew Griffin. Make sure if you want to go check out my stuff I put on YouTube, subscribe to that channel. Please leave me your comments and feedback. Let me know what you think about this show. Any way I can improve it, even if it's nitpicky. I want to know your thoughts and opinions about the stuff I talked to you about today. And like I said, make sure you follow me. Make sure you subscribe. I definitely want to hear from you. And like always, thanks for listening to the Proof of Money podcast. I'll catch you next time, and I'll see you on Sunday.